Welcome to the Daily Market Recap. Today is Thursday, August 27, 2026. And what a wild, action-packed ride on Wall Street today. Tech stocks came out swinging like absolute champions after blowout earnings results from enterprise software and cybersecurity giants ignited a massive market rally. Broad equity indexes pushed firmly higher as investor fears about an AI spending cooldown completely melted away into pure bullish euphoria, lifting market sentiment across the board. Taking a look under the hood at sector performance, information technology and cybersecurity were the undisputed kings of the trading floor today, staging a huge rally and driving the bulk of index gains. On the flip side, defensive sectors like consumer staples and healthcare felt the heat, taking a backseat as capital aggressively rotated right back into high-growth tech. Over on the sentiment gauge, the CNN Fear and Greed Index clocked in at a cozy 58, keeping us sitting pretty in official greed territory. Investors are feeling confident and actively buying up dips, but staying just balanced enough not to spark an unsustainable FOMO frenzy quite yet. The top story rocking Wall Street today is the massive resurgence in enterprise software and cybersecurity. Blockbuster quarterly earnings reports blew past analyst estimates across the board, with upward guidance revisions confirming that enterprise AI and security spending isn't slowing down. It's accelerating. Traders rushed in, sending cloud software stocks to spectacular new high ground. In macro news, economic data released today delivered pure music to the market's ears. Moderating inflation trends and stable economic activity have traders doubling down on expectations for upcoming Fed rate cuts. Bond yields stabilized and equities got a clear green light as lower borrowing costs remain firmly on the horizon. Meanwhile, traditional consumer staples and packaged food companies found themselves in a tough spot today. As consumer habits shift and input costs remain sticky, profit margins in consumer staples and healthcare services were squeezed, prompting institutional money managers to dump defensive holdings in favor of tech hypergrowth. Leading our winners circle today, identity security titan Okta went absolutely ballistic, surging over 20% after dropping a monstrous Q2 earnings report. Quarterly revenue and bookings smashed analyst targets, driven by rapid enterprise adoption of their AI identity protection suite. Short sellers got obliterated as Okta proved cybersecurity demand is red hot. Next up, cloud giant Salesforce flexed its massive muscles, surging over 10% after crushing earnings forecasts and raising its full-year guidance. Their Agentforce AI platform is turning into a revenue printing press, proving enterprise clients are willing to pay top dollar for autonomous AI agents. Mark Benioff and company delivered a masterclass today. Completing our top gainer trifecta, cybersecurity powerhouse, CrowdStrike jumped nearly 10% in a massive show of strength. Customers are clearly sticking with CrowdStrike's Falcon platform as annual recurring revenue beat expectations handily. Wall Street showered the stock with price target upgrades, proving true industry leaders stay on top. Switching over to the dark side of the board, Health Equity took a nasty beating today, plunging over 10% after a disappointing quarterly report and a lowered margin outlook. Increased service costs and slower health savings account growth spooked investors, sending the stock tumbling to key technical support levels as traders hit the exit. Spam and packaged meats couldn't save Hormel Foods today as the stock sank over 10% following an earnings miss. Squeezed consumer budgets and rising supply chain costs slashed profit margins, proving that even staple food brands aren't immune when Wall Street demands growth. The bears definitely ate Hormel's lunch today. Rounding out our top losers, enterprise data infrastructure provider Everpure took a heavy beating, tumbling nearly 9% today. Margin pressures and cautious forward hardware guidance spooked Wall Street analysts, causing the stock to break key support as traders rotated capital straight out of storage hardware and into booming software plays. Looking at the charts for the S&P 500 via SPY, the bulls successfully pushed price right back toward historic high territory near $565. Key immediate support now sits firmly at $558, with minor overhead resistance hanging at $568. If SPY breaks above $568 with strong volume, clear skies ahead could send us into uncharted record territory. Over on the tech-heavy NASDAQ ETF QQQ, the chart is looking straight up parabolic. QQQ comfortably sliced through initial resistance at $480, turning it into fresh support. Crucial upper resistance now rests at $488. As long as QQQ holds above $475 on any minor pullbacks, the tech bull market remains firmly intact. Finally, small caps ETF IWM had a solid consolidation session, hovering near critical pivot levels around $218. Support for IWM stands strong at $214, while heavy overhead resistance looms at $222. Small caps are waiting for the next Fed catalyst, and a breakout above $222 could trigger a massive catch-up rally. Turning over to the digital asset arena, Bitcoin showed solid resilience today, holding key support near $64,000 while testing overhead resistance at $66,500. Institutional ETF inflows remain positive, providing a sturdy safety net. A decisive daily candle close above $67,000 could launch Bitcoin's next big leg up towards 70K. Ethereum mirrored Bitcoin stability, defense checking key support around $2,700, while eyeing immediate resistance at $2,850. Staking yields and Layer 2 network activity continue to build a strong fundamental floor, but ETH bulls really need to push past $2,900 to ignite a sustained breakout. Zooming out to the broader altcoin market, overall market cap consolidated in a tight range as total market liquidity favored Bitcoin and tech stocks today. High beta Solana and AI-linked tokens showed notable localized surges, but most mid-cap altcoins are patiently coiled up, waiting for Bitcoin to make its next decisive directional move. As we wrap up today's trading action, overall market sentiment remains solidly bullish heading into tomorrow. Tech leadership is firing on all cylinders. Earnings season continues to deliver positive surprises, and the path of least resistance for equities clearly remains tilted to the upside. Keep your eyes glued to the economic calendar tomorrow morning. We have key PCE inflation data dropping, along with consumer sentiment updates and initial jobless claims. Any unexpected inflation surprise could trigger short-term volatility, so manage your risk closely. And that is your post-close market breakdown for today. If you enjoyed this video and want to stay ahead of the markets every single day, smash that like button and hit subscribe right now so you never miss an update. Thanks for watching, and see you tomorrow.